Hi, my name is John Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Doing well in you, Deon.
Very good, thanks. So we are on episode 16, and from last week we had discussing the McDonald's index, which is a good way of actually seeing the value of what your money buys per country.
Yeah, it's basically a, let's call it a cheap way to gauge buying power of a currency relative to other countries. It's called the Big Mac Index, and basically what it does is it sizes up the price of what you would pay for a Big Mac typically, and sort of just pits it against other countries to see the where you place according to that.
Okay, and from that, what was the thing that came out clear? Because of course we were looking at South Africa specifically. Our rand has been trading up quite high against the dollar. I mean, we've gone into the mid to high 19s. There's been quite a nice pullback where it's now probably around the mid 18 rands to the dollar. But what does it actually mean when we talk about the value of what your money is?
So it's basically purchasing power. How much can you buy for your money? Um, and as I said, the Big Mac Index is a very cheap way of doing it because it's the same thing being sold in different countries across the globe. And what I've actually done is I looked up previous Big Mac indexes, but I think the newest one I could find was 2024, and I don't think it's still a very, or I don't think it is an accurate representation of where we are at now, because as you know, a lot of things have changed since last year, and changed drastically in some cases.
So what's interesting, and you mentioned 2024. But we're now into towards the end of April of 2025. And if you think of what we've gone through over the last 4 months, or just through, but literally short of the last 4 months, and 2025, if you had said towards the end of 24, this is where gold would be, this is where the world would be, and that by so close, not even the first half of the year done, and so much has happened.
Yeah, it's a third of the year done, and sometimes you would just think it's going absolutely insane. I mean, as I said last time, you need to be an auctioneer to keep up with the gold prices these days. Um, just last week or this week actually, it shot up past 3,500, and it's dropped back now, but obviously people saw 3,500 and decided now's the time to sell. So I'm sure there was quite a bit of profit taking happening, and spikes like this, we usually do see that correction afterwards.
And what's interesting from that is if you see how gold has gone back to around $3,300 an ounce. So that's clearly showing us a new resistant, bottom resistant line where it will sit and then will probably spark up again, go back to 3.5 and so on, and then start to pull back. When it drops to these levels, it's a clear sign that this is an opportunity. Of course, there's profit taking, and that hence the price actually drops. But this is also a very good opportunity to be buying.
I think it is. Also, there's still talk of the Fort Knox audit, and it's kind of a double-sided thing here, because no matter what happens, the price of gold is going to go up afterwards. Because if all of the gold is that's supposed to be there, then why are they counting it? What are they planning? Are they planning on making a gold-backed currency again? What's the whole deal behind that? The value of gold is going to go up. Renewed investor interest, and we're going to see that price rising. If it's not there, people are going to wonder, oh no, where's it gone? There's a shortage. Let's buy what we can, and the price is going to go up. So I don't see the audit of Fort Knox doing anything except push the price up.
And again, you can see just based on the market volatility, the global uncertainty, both geopolitically and economically, that it plays straight into this. And as you said, I mean, and this is quite, well, it's not concerning, it's interesting that this whole Fort Knox audit that's due is going to be a clear understanding exactly how much gold the US is holding from a government perspective. And as you say, the thing here that we see is there's only one way of it going, and that is to continue its move upward.
It is, and you know, we are on this upward trajectory. Yes, we did see a significant drop in the gold price over the past day or two, but that was because we hit that absolutely insane peak of 3,500. You know, there's profit taking, the price drops, but there's still all this tension. There's nobody knows what Trump is going to do next. I mean, is there tariffs? There was, now there's not, then there's tariffs again, and then it's cancelled for something else. And I mean, what exactly is going on? And that's the thing, nobody knows. Literally nobody knows what's going on and what's going to happen next. And it's that you know, that uncertainty that we're talking about, and uncertainty drives investors to gold.
Absolutely. Again, if you see the gold silver ratio, it's also at a nice high, not an all-time high, but it's over 100 right now as we speak. Silver's up again, where there's also that drop in the price. It then maintained itself into the mid 32s, and it's showing that consistency again from the price perspective, that it's not as erratic, and also it's definitely building up, and it's that winding of tension to release to drive it to higher prices.
Yeah, we've seen a lot of up and down movement over the past week, over the past few months, in fact. But it seems that right now, gold and silver has sort of found a new baseline. For gold, it seems to be 3,300. As soon as it dips below that, then it's probably a good time to buy. And silver seems to be sitting at around 32 and a half, close to $33 an ounce. And yeah, it's a new baseline. It's the new bottom line for both the metals, and I don't see it really going much lower than that in the near future.
Okay, so if we look at that now, and I think what's very clear is we just touched on it, and then we just went through a bit of the things with regards to rand dollar, the gold, and then of course silver, platinum is pretty much lateral. There's been a slight increase, but nothing nothing really to even comment on any further. I still do believe that platinum, based on its technologies, very specifically hydrogen, and I was actually reading an article yesterday, is that still to come, and the growth in platinum is still to come from that.
Yeah, I mean, platinum is we shouldn't forget that it's an industrial metal. It's tied very closely to the economy, and as such, it's not going to see the erratic jumps up and down of gold or silver. And especially since the automotive sector, which still is its biggest consumer, um, it's moved to palladium, because at the time palladium was a lot cheaper than platinum. That is, that reversed, and palladium went through the roof, and now it's sort of fallen back down. And there's not really a reason to move back to platinum again right now, as there was about a year ago or 2 years ago. So yeah, platinum is just sort of hovering,
Yeah.
holding on to that price.
Okay, so let's get straight into it. So we mentioned the Big Mac index, and again, we want to actually do that direct comparison, because a lot of the time there's a lot of market commentators within South Africa will say that the rand is actually undervalued in relation to what you can buy, and this Big Mac index is a good barometer of that.
Yeah, as I said, it's a cheap way to gauge buying power, because it's a product that's the exact same product sold all over the world. And if we look at the Big Mac index, we see some very interesting things. South Africa actually sits almost at the very bottom of that index, in terms of, if you go, at the top of the index, you've got your most expensive, at the bottom you've got your cheapest. And South Africa sits very close to the bottom on that. Now, what I've done is I looked at 6 countries, which is South Africa, US, UK, Switzerland, Argentina, and Australia. Now, the reason why I looked at Switzerland is because that's where it's the most expensive. And the reason I looked at Argentina for South America was because they had the default, and we know their currency's been going absolutely insane. So what I found was, if we look at it, a Big Mac round here costs 51 rands 90. Last I checked, I actually went on today and I checked all the prices for all the different countries to get it as accurate as possible, and that translates to $2.80,
Okay.
which is extremely low. If we look at the US, it's sitting at $5.99, which is 111 rands for a Big Mac.
Sure.
And sadly, the US, except for Australia, where it's $8.70 Aussie dollars, it translates to about 103 rands or 5 rand 58, $5.58 for a Big Mac. So that's the next lowest of the countries that I looked at. If we look, as I said, Switzerland is the most expensive. You're looking at 8.1 Swiss francs for a Big Mac, which translates to $9.85 or 182 rands for one Big Mac. So it gives you an idea of the buying power of the rand. And according to that, we are looking extremely strong. Argentina is 7,300 pesos for a Big Mac. It's $6.62. It's 122 rand. So they're all sort of there in the ballpark: 125, 122, 111, 103, and then we've got the two outliers: 182 for Switzerland, and South Africa sitting at 51 rands 90, which is absolutely crazy.
Yeah, I'm actually I'm quite shocked by those figures because I did expect it to be a little bit more within its peers, and well, not very much Switzerland, but Argentina. I'm thinking of some maybe of the other emerging economies that we could possibly look at it at another stage. But for me, to be literally half the value to what those other countries are paying is phenomenal.
It is, and I mean, if we look at the rand to dollar, it's sitting, when I did this whole thing, it was sitting at 18 rand 54
Yeah.
to the dollar. Um, but if we look at these figures that I've brought up here, and we convert that, then the implied rand to dollar ratio is actually 8 rand 66.
Yes, and realistically, when you say that, so what that means in simple terms is the rand should be actually at that value in relation to the dollar, 8 rand 66 rands to the dollar, where it's, as we mentioned, literally 18 rand 50 to the dollar. And but again, there's other factors that plays into the fact with the devaluation of the rand. And what it does show is that still in this country, and we living in this country and earning rands, think everything has gone up, and it has. Proportionally, over the last 5 years, things have gone up exceptionally. But if we do that direct comparison to other countries, we still have phenomenal value based on what our rands can actually buy.
We do. I mean, if you think about the fact that in New York, and I've said this before, a New York apartment, one bedroom apartment or studio apartment, rents for about $4,000 a month. Now that's sort of the average price. $4,000. I mean, if we convert that, that's like 60, 70,000 rand. I mean, imagine paying 70,000 rand to rent a one bedroom apartment.
I know this because of I actually have been looking at certain properties, and what's interesting is from a rental perspective, a 70,000 rand property would buy you a decent size, big property in Bryanston or one of the major big affluent suburbs of Johannesburg.
And that's the thing, that is pure luxury.
Yeah.
You know, this is not, I need a place to lay my head at night. That is pure luxury.
Yeah, you're looking at a house that's at least minimum of 5 bedrooms, pretty much all of them en suite, property size at about 2,500, 3,000 square meters. On property, actual building size, you're looking at over 600 to 800 squares.
That is, and that's what I'm saying. We can actually buy a lot with our money. It is pretty strong if you compare it to other countries. I mean, if we look at this Big Mac index now, just out of interest, I did the dollar pound conversion as well. So the dollar to pound is 0.75 dollars to the pound. And if we look at the Big Mac index, it implies it at 0.85. So there's not much in it. But if you look at the rand, 1854 versus 866, it's an absolute insane difference there.
It's very interesting, and again, I think what it kind of also draws me to, and I've said this so many times, is as a country, our greatest strength is export. Our greatest ability is to actually be exporting and earning foreign currency based on the fact that our local environment is still cheap to operate in.
It is, and but now I'm going to throw another spanner in the works. One you didn't know was coming. We call it the patented Theron iPhone index.
Oh, and this is somebody, by the way, that doesn't own an iPhone.
No.
I'll have you know. Yet we do have within the odd when we have a general office staff meeting, we can see who are the iPhone users versus the non. And I will put my hand up. Yes, I am an iPhone user. And I am definitely a minority within our own company.
So what I did exactly the same thing, but instead of a Big Mac, I decided, or actually, our producer over here and me had the same thought at the exact same time, and we both thought, what if we use technology? You know, we've done the Big Mac, which has been used for years and years, but what if we look at technology, the price of technology around the globe? So what I did was I took the iPhone 16, the stock standard 128 gigabyte, and this was actually easier than looking up the prices of a Big Mac because you've got the Apple website, which is every country just gives you a price. Um, so what I did was I took the 128 gigabyte iPhone 16 in black, and I compared that to between all the countries. Now let's start with South Africa. I know you can get it cheaper if you go through Vodacom or this, that, or the next, but on the on the Apple website, it's listed as 19,999 rand, which translates to $1,079.90.
Okay.
So if we look at USA, Apple website once again, so there's no discrepancy here. I took the original price of the same product, it's 799 rand. Dollars, $799. And that translates to 14,769 rand. Oh, 96 rand, sorry. I did the same thing for UK, which it's funnily enough 799 pounds, which translates to $1,064, and that comes to 19,708 rands. In Switzerland, it's 849 Swiss francs, $1,033, 19,144. So we can sort of see a more concrete pattern here, something a little bit closer to if you compare it between the different countries. Argentina, once again, the outlier, and this time in an absolutely insane way. The iPhone 16 is 2,888,888 pesos.
That sounds a lot, but I will have you know it's not that much.
It is actually a lot. It comes to $2,619. So in Argentina, it would cost you 48,500 rands for an iPhone 16. And then, of course, Australia, strangely enough, is the closest to the US, coming in at 1,399 Aussie dollars. It's 896 US dollars and 60,605 rands.
Okay, so what's interesting there is you've given quite a number of figures, and we are going to post this on the discussion so you can see the numbers. But where does that, so what's the final point that you take from this, from your perspective?
So when we looked at the rand to dollar exchange rate, as we said, currently it sits at 1854. When I did these calculations, it was 1854 to rands to the dollar. If we take the iPhone index, we're looking at 25 rands to the dollar, which is the complete opposite of what the Big Mac index has just told us. So where do we pitch this?
So that's actually quite interesting because for me, again, if you look at automotives, cars, you compare what we pay for cars in this country versus what you'd pay in other countries, and there's a definite increase in price. So it's interesting that on certain items, so from a produce side, in other words, food, it is well priced and we still cheap. Yet then when you look at technology and things that are literally, as you say, exactly the same but across the world, we are actually competing with the Switzerlands and America and a lot of those big countries and economies in price.
Yeah, I mean, it is so close between us, Switzerland, and UK, all sitting around about 19,000 rands. And as I said, yes, you can get it cheaper here. So we would even be pitched below that if you get a good special somewhere.
That's quite interesting. And I think what we're going to do is keep an eye on that with the Big Mac index. And I think then it's a good way of probably actually rationalizing where the price is right now. If you think about it, if you're sitting at on the max side that it's saying it should be around 8 Rand 50, you said, to the dollar. And if you look on the IMAC or the Tehran IMAC
If you look at
index,
the Mac and the Mac.
yes, you'll see that's 25. So you kind of draw a midline. It's about 17. Yeah, it's around
It's,
17.
it's round about where it is. And as I said, yes, there's a luxury tax, as they call it, on any smartphone above 2,500 Rand in South Africa. But I mean, it's 9%. It's not like that's going to make a world of difference. I mean, we're talking much, much more than that.
That's an interesting observation, and I definitely would like to continue to look at that. So going into the next part, and I mean we had spoken of this before, and it's actually one of our longest running case studies. So just to give a bit of a background on this is we wanted to understand, when I first started working, which is a good couple of years ago now, and I'm definitely starting to see that, when I started working, the our parents, they probably worked for one company their entire life. They got their 25-year golden watch, and they then went off into the sunset, retiring at around 55, 60, with their retirement annuities, their pension. And they would then go and enjoy the rest of their lives eating good food, going on holidays, and having quite a decent life post work in that retirement section of your life. The world has changed. The world's changed drastically, where most people will probably not retire fully until their death. And you also look on the converse that most children are staying at home until into their late 20s, early 30s, where they cannot afford to buy a new property. I mean, this is a global phenomenon right now. So what we decided to do, and again, we were told to believe, go get a job, get an RA, work hard, and when you get to that retirement age, it's going to be able to give you that little nest egg to set you off into the next phase of your life. What's interesting is this is, and just to give you a bit of a background on my RA, it is with one of the top financial institutions in the country. So it's got the best brains and best minds that have produced this product, which on paper, when you read it, it says it's going to give these returns and it can guarantee all this. Yet in the fine print, with a little asterisk at the bottom, which you can virtually not read, due to market fluctuations, they cannot guarantee any of this, which is a given. So what we went and did is we took the RA and we applied the same premiums on a monthly basis. So what I was paying every single month, we then applied that to buying of physical gold. And again, Willem, the important thing here is we said, let's be realistic. We don't want it to just be the spot price of gold, because people can't buy the spot price unless you are buying paper derivatives. But if you want the physical thing, there's got to be a premium to it, which we then added.
Yes, so as you correctly said, we didn't just take spot price and call it a day. We added the premium on there. And also what we did was we took the Rand dollar exchange on the first of every month when your premium goes off, and we've done that for, believe it or not, 15 years and 7 months is the duration over which we've run this. So we've done that. We also took the gold spot price on the day, and then we've done all of these calculations.
And also including the rand dollar price again. So we do bring that in because it does have quite an important thing that we'll discuss further.
Yeah, the biggest thing about why we keep bringing dollar into this is because it's difficult to gauge exactly how well you're doing if you just look at it in rands, and it's going to become very apparent very quickly.
Okay, so let's get into it. So we just to give the baselines here, it's done over 15 years and 7 months. Okay, what was the initial first take that the baseline that we created?
So let's start with what you've invested so far. You
Okay.
have invested 206,000 rand and 27 rands. So it's 206,027 rands. Currently, it's valued at 200
Drum roll.
293,902 rands.
293,000.
902. Which, if we look at the performance, then that's a 42% increase over your premiums that you paid.
Over a 15-year,
Over
short of close to
15.7-year
16-year
premium.
period.
And I mean, 42%, doesn't sound all that bad, does it?
Yeah, my first reaction is, gee, that's not too bad.
I'm going to break your heart in a second. So let's go to the US dollar side of it. All right, so now, as we said, we took the rand to dollar exchange rate every first of the month when your premium goes off, and we converted that same money into dollars. So if we do that, we're looking at $15,627 that you've paid into this RA.
Okay.
Up to date. And are you ready for this one?
Yes.
The current value is sitting at $15,878.
You mean I'm that little bit more? A couple of hundred, not even a couple of $100.
1.61%.
Growth.
1.61% growth in terms of US dollar.
Okay, so again, this is important and it's quite interesting. We brought the Big Mac index, we brought the Theron Mac index, and now we bring in this in. And what's important here is we start to also see the actual value. And what was quite interesting, there was actually periods of time during the case study, during certain years, and I'm talking probably about a year and a half ago, where the actual RA was actually running at a loss in dollars.
That's true. I think the last two iterations we've done of it, the last two times we've dragged it out and really looked at it, were the only two times that it has actually had a positive on the dollar side. And I'm looking at the gold price I used this morning. It's already climbed since then. Not much, but it has climbed since then. So it's not enough to warrant doing this over, but it is a little bit higher than it actually is at the moment that we've got here.
Okay, so now we got the rands and the dollars out. So just to recap, 206,000 rand investment over 15-year, just short of 16-year period, gave me it currently gives me 293,000 rand.
And here's the thing, the sad thing. If we look at it in compound annual growth rate, if we look at it in rands, you're looking at a 2.28% compound annual growth rate over that 15 years, 7 months. If we look at it in dollar, you're looking at 0.1%. Okay. And that is, it's actually sad to think about it, that you pinning your entire future on those figures.
And again, this is also a lot of the trends, and also why we've seen such an uptake in precious metals is your traditional investment vehicles such as RAs or retirement annuities have not given the performance they promised.
Well, that's the thing. It's not bad, If you look at it, 48%, it's not bad. But if we look at it in terms of comparing it to other currency, the inflation is just killing us.
And that's an important thing to add here, is that's what ultimately is, you get a devaluating currency plus the inflation, which also has that massive effect on the actual value.
That's true. Now, let's get into the juicy bit.
And this is a part I truly, truly love. And this is why I know I'm personally passionate about what we do. And I know, Willem, you 100% behind that, is these are, and again, understand we've made sure that what we're giving you is as accurate and real life and realistic as possible.
So here we go. So we've got the baseline of 206,027 rands invested.
Correct.
Now, over that time, if we take the gold price, each time your premium goes off, we convert that into gold and see how much gold we can buy for that. you would have accumulated 305.33 grams of gold. And that translates to 9.78 ounces of gold. And that is the gold price plus the premium included.
Okay, so also, but what's important then, as Willem said, so on a monthly basis, we took the spot price of gold, we added a premium, and then we created that value. So of course, the price would go like that. There would be times where it was cheaper, more expensive, and so on, and would move accordingly.
And it's interesting, I had a quick look. I mean, I looked back at the original, the very start, the first premiums you paid, and you were getting 2.3 grams of gold for 600 Rand.
I wish I could be getting
the
2.3 grams now for 600 rand.
The last premium, I think it's very sad, but it was like 0.9
Yeah.
grams of gold, and that's on a 1,700 Rand premium. So the premium has gone up significantly, almost 60%, or almost 3 times its original premium, and yet you're getting less than half.
Also, what's important here is we're showing the importance of long-term investing. And again, this is month by month, small amounts. So this is not someone going in and taking 200,000 Rand and buying gold. Yes, if you have got the 200,000 Rand, it would be a great way to make sure your value of your gold would increase. But this is that small bits, incremental increases on a month by month basis.
It's literally the same as you paying for your retirement annuity every month.
Okay, so now we've got the rundown of gold. So we were sitting with 9.7 ounces, 305 grams of gold. Current value.
So we were looking at a gold price when I did this morning. We were looking at a gold price of $3,316.61, which translates to 600,799 rands.
You're gonna have to just say that. So 600,700
and 99 rands worth of gold that you would have accumulated.
Okay, so let's just contextualize that. Current RA that I have, and I actually like I said, every single month I send a screenshot of the current updated of my RA to say, Mr. Rebello, by the way, your RA has grown by X, and then so I send that screenshot. It shows the premium, the monthly premium, it shows the total investment, and then it shows the total value. So we're looking at 206,000 Rand invested, and current value is 293,000, just short of 300,000.
They call it 294. It's close enough.
Yeah. And again, same money. So that 206,000 Rand has now bought gold to the value of over 607,000 Rand.
Well, 600,799 Rand.
That's what I said.
Don't worry.
Listen, if Jay-Z can get away with it,
I was about to say
I could get away with it too.
I was about to say you can still run for president. Anyway, so now here comes the most important part, the most tricky part. If we convert that into dollars, US dollars, we're looking at $32,458. And this is where the massive difference comes in. If we once again look at the performance then from the start to where it is now, we're looking at an increase in US dollars of 107%.
Yeah, I was going to say what's quite interesting is you look at the value when we converted it into dollars of the 293,000 Rand, and you converted it to dollars, you were looking at, you said $15,627. No, sorry, $15,878.
Yes.
So what's quite interesting is, and then you look at the current value of that, and it's $32,458.
Yeah, and as I said, that is 107% increase on dollar-wise, whereas your RA had 1.6. I mean, that just gives you an idea of exactly the difference. You know, as you said, we were taught put your money into your RA, you can retire, and everywhere we're seeing all of this 401ks, everything. We're just seeing all these people stand up in front of the people who've been investing in these things their entire life saying, oh, sorry, you're just going to have to retire later now, you know. And this is the thing. If we take that same thing and we look at it into the performance in terms of rands, we're looking at 191% return.
That's phenomenal. Again, what it also makes me think of, and it's quite a big trend now, where there's a big drive to have offshore investment vehicles, where the likes of a Magnus Haystack, and that they've been going on it for years to buy offshore to secure your fund. In other words, de-rand your investment and take it off a rand in based commodity and move it onto something like the dollar, which again, the dollar is also fluctuating, but the rand is fluctuating greater than the dollar. Our argument takes it even a step further and saying, why put it on the dollar when you can put it on gold?
And the interesting thing about all of this is that if we look at the compound annual growth rate on the gold, we see in terms of dollars, it's 4.8%. In terms of rands, it's 7.1%. I mean, compare that to 0.1 and 2.28%. It's quite obvious that life is no longer what it was when our parents were in our position, It's no longer a case of, yes, we invest in our RAs and we're going to be happily retired by the time we're 60 years old. It simply doesn't work that way anymore.
Also, what we really need to understand here is we discussed it in the opening that the world is in very new territory. We look at just how traditionally things were and are and how they should be, and yet that is being rewritten all the time. Things are changing at such a pace right now. I mean, you look at technology, the rate of technology doubling. It used to be every 3 years. We're talking it's probably even under 18 months now that technology is just gaining momentum. We look at the AI, what that's brought into things. And again, we had this discussion the other day, and I remember having the Nokia, I think it was Xperia, and it was one of the first phones that had sat nav on. And I remember opening it. It was one of those ones that you open and you click on it, and it would sit there buffering. And I thought, this is a waste of time. And I never ever used it on that phone. And yet, every single phone we have now, I climb into my car, sat nav, and it just runs. And it's normal, it's a normal way of functioning. But the technology behind it, in the difference of, say, 20 odd years, has changed the world completely. So we look at AI, we see where AI is now, and it is starting to show its potential. And I don't even think we understand the great level of what and how it will actually be integrated into our lives.
No, definitely. I mean, just little things that, I've noticed that I've always thought, why do I want AI on my phone? What am I going to do with that? And I've had two instances. Well, the first is every time I use Google on my phone now, it's got that little AI write up at the top, which I find extremely handy sometimes because you just want to look up something quickly. And usually it gives you a pretty accurate comparison there. A big Mac index, it was pretty useless to look up because I kept getting the figures from 2024. But it knew exactly what I was looking for. That's the thing. It knew exactly what I was looking for while I was doing those searches. I never once entered Big Mac index, but it kept bringing it up. So obviously it understood what I was looking for. And it's getting to be quite scary. And yeah, you mentioned, I mean, what is it, Moore's law that predicts or that calculates the
Yeah.
growth of or the acceleration of technology. It's out the window. You
As with everything right now, and again, this leads us to where the world is uncertain, where traditional investments were supposed to give us these nest eggs that would be able to put us off in that second phase of our lives. And now we know that literally most people will work and literally to their deathbed, literally.
And the worst part is you've got a billionaire standing there up front in front of you telling you with a plain straight face, oh, I'm sorry, but you're going to work until you die. And you know, and this is, I think, the point we're trying to make is, you can't just rely on the traditional methods that your father and your grandfather used to prepare for their later stages of their life. You need to look into other avenues, and we advocate gold. I mean, I think at this point, it's we should mention we're not financial advisors. Whenever you do any kind of investing, do your own due diligence, get advice, as much advice from as many sources as possible. Don't just take the word of two internet crackpots for it. It's as simple as that. And yeah, and then this is pre-recorded, so by the time you get to see this, these figures are probably going to have changed drastically anyway.
Who knows? In when we shoot the next one, who knows? Gold may be at $4,000 an ounce. We don't know. But I think also the main thing of what we're really trying to get across here is yes, the pricing will change, but ultimately we're showing you trends. We're showing you that the volatility of the markets, the uncertainty, and what it actually starting to really unravel. So it's almost when you're so close to something, you don't actually see the enormity of it. It's almost like having your face against a wall or a canvas of a beautiful image, and all you're seeing is literally what you can see. Suddenly, you take a few steps back, and then you start to see that the bigger part of the canvas, and even more, and you see even more. And what's interesting is I did that with the gold price, and we were talking about it earlier, and you see it from 90 from pre-70s, and it's a little blip like that, then suddenly 71 is a big little blip, and it goes through to around 2005, shoots up 2011, drops down again, and then it goes to this period 9 to into the 2020s, and then suddenly just goes parabolic. And what's interesting is that is a chart that's done over the full period, and it is a parabolic drive right now.
Yeah, I mean, we always talk about that climb in the 70s and how meteoric it was. And when you showed me that chart today, I went, is that it?
The little blip, yes.
Is that it? And I thought it was what we are seeing now, because what we're seeing now is 3 times as big.
And that's the thing is when we talk about the gold price, it's moving in hundreds or $50 per move. You know, in comparison to silver, that's literally not even the price of silver in movement. Yes, we've spoken of silver and its growth and potential has always historically outperformed gold, hands down. Yet gold is definitely on an all-time run. And I don't even think, and again, we are going to come close to doing our next predictions, next review of the price of gold. We're getting very close to it. I mean, June is literally probably what, about
Two
six,
months.
8 weeks away.
Yeah, 2 months,
Yeah.
roughly. 2 months and change.
Yeah, and again, then we will do that mid-year review where we think it is. Again, we see market commentators, banks starting to say, did we say 3,000? Oh, we meant 3,500. After what happened this last week, you're going to have a lot of those institutional investors starting to say, hold on, did we say 3.5? We meant 4 or 3.8. So it's this big guessing game. Me personally, and with all my clients, one thing is I know that their wealth in gold is moving in the right direction.
Definitely. And we spoke about currency devaluation, and you mentioned Hastings, who said, get it out of rands. But the biggest problem is I don't have the money to invest offshore. Sure, you don't have the money to invest offshore. We don't have those millions, and that speaks to your top 1%. It's a lot easier to go and invest offshore if you've got 2-3 million bucks lying around. However, I've got $1,000 to put into gold every month, and that's the difference.
Yeah, and that's really what the RA case study is about. It's showing that yes, if you got a lump sum amount of money and you want to purchase precious metals, there is that opportunity, and you can kind of lock the price in. But if you don't, and you can only rely on a little bit of available income on a monthly basis, it still pays to buy a commodity such as gold.
I think that pretty much sums it up for today, Deon.
Thanks a lot, Willem, and I will see you next week. Take care.
Yes. And if you liked the video, hit the like button. If you want to see more, be sure to subscribe. We'll see you next time.
Bye.